Good morning, traders, and welcome to Wednesday the 19th of April. It's the morning update, and it's Mark Owen speaking this morning. Well, yesterday was another interesting day in the market, to say the least. It's one of those times where we've got to be very, very careful. It seems to be one news announcement after another. We had, well, we're still currently short in the equities market on the S&P, but I've got to be honest, after Sunday's gap down, everything was looking very, very promising after the news about the talks in Doha being frozen, tensions through Iran and Saudi Arabia on oil production. Only for yesterday, then the Kuwaitis to come in and announce the oil strike. So basically, they're not producing any oil anymore. So what came out of the Doha talks was basically nullified from Kuwait. So whether those strikes go on for 1 day, 2 days, 10 days, however long it may be, we don't know. And what we saw was that basically that information there then just passed through into the equity market or the indexes, and we just had a huge rise in the S&P. If you look at the particular daily candle, it was insane. Huge gap down and then closed above the highs, and we're now breaching the 2100 mark. So whether we're going to see further rallies now on the S&P because we've got through the 2100 and we see sentiment buying, I don't know. But what we have to do is we have to stick to our rules. My rules say that I leave my trade where it is. In all honesty, it doesn't look very promising for the S&P right now, but like I say, rules are rules. These are what we've tested. These are what work. It does mean that at times we're going to have to suffer drawdowns, and in recent, I'm not going to lie, it's been a tricky couple of weeks through volatility swings. We've got some nice positions, but it's one of those things where the market tends to give us a bit of a correction every now and then. Well, let's have a look what's happening today. We've got a day of speeches from the governors, so this is what I want everyone out there to be careful of. When the governors are speaking on a particular currency or economy, there's a tendency to have wild swings. So this is where I need to make sure that whether you're a protege or a Phoenix Blue member, or you just come through the basic Ignite program, you need to understand risk management and exposure in the market, and when you shouldn't have certain positions in. So right now we've got RBA minutes have already been, but Glenn Stevens is speaking later on this afternoon at 2:30 UK time. Then we've got Mr. Carney speaking an hour later, and then we've got Governor Polos from Canada speaking. What's that? 2.5 hours after that. So we've got, sorry, 25 minutes after Mr. Carney, not 2.5 hours, my mistake. We've got a day of 3 major currencies, their governors speaking about their particular market. Whether they're going to talk about whether it's overvalued, undervalued, or neutral, will remain to be seen. Obviously, Carney's speech will probably be around Brexit and the fears of leaving the EU. There's a lot of talk in the UK right now about how much damage it will do to the UK. The government are spending, they've spent I think £8 million of taxpayers' money sending out leaflets on telling the public that it's a bad thing to leave the EU. So they're really promoting that we stay in the EU. So whether this is, whether we're going to see a little bit of a bullish effect on cable due to maybe swings in sentiment, whether we're going to stay in or whether we're going to leave, I don't really know. But this particular market, cable, has actually caught me out I think 3 times in the last month now. So we're being very, very cautious on cable. What we can look at on cable is if we do get the further downside, which we are expecting, it could leave us with a fantastic buy opportunity that we could leave in for 6 to 12 months. If we get in and around the 138s, 139s, yeah, depending how you're going to do your trade management, within a year or so we could be back up at the 1.6s. Okay, so there's a potential fantastic trade coming in there if we do get down to the lows. Glenn Stevens for the RBA, well, obviously it's a commodity-backed currency, the Aussie dollar, so There's a new trade agreement come through with China last night. I'm not sure on the full details of that, so please forgive me, so I'm not going to talk about it. There may be some inclination about that, which will obviously, if it is good for China, then it will be good for the Aussie dollar. And then we've got the Canadian Governor Paulo speaking. Obviously, the increase in oil prices has strengthened the Canadian dollar in recent times. This is driven very heavily by the oil sentiment, so we've got to be very, very careful with Canadian dollar, especially with the news talks coming out of Doha, of Saudi and Iran tensions, Kuwait on strike. It seems to be one thing after another, so be very, very cautious with anything CAD related. Okay, so let's have a look what happened in the Nikkei overnight. Well, when I was talking to you a couple of last week, I think it was, we were somewhere over here, and I was saying that we'll probably be looking to test the high of this channel, and then it'll be a matter of what happens from the high of this channel. Okay, so obviously the Japanese government are looking to get a break above this channel, and if we do get a break above this channel, then we've got to look at the 17,200 mark, see if we can get a daily close above there. Then we can use this as a potential real push on if we are going to get that surge in the market. If not, we're going to see further downside and a selling of Japanese equities and probably money flow into the yen. So this is going to be a crucial point, whether we're going to see a weakening of yen, i.e. the market rallying up, or a strengthening of yen and the market selling off. So that we can see here. We can see now that the dollar yen is, this is a weekly chart, we can see it's coming up into a resistance area pretty much like the Nikkei. We've also got another one relatively close here at about 110.30, 110.60, and then our next stop is this little trend line here in and around 112s to 113s. If we are going to see a sell-off in the Nikkei, which will cause uncertainty, we'll see a strengthening of yen, and we'll probably see it test 106s, 105s, this box down here. Okay, looking at the dollar index, well, we predicted dollar strength coming in from this zone down here, and we took a really nice trade, which we're still in. We banked first profits, and we actually took a little bit of the money out on our second position, just because we wanted to bank some good profits that were in. We were over 200 pips up at this point on Euro and Swissy. I think it was 180 pips up on Euro and about 167 on Swissy at this point. So we closed half of our trade 2 position because it was coming into another resistance area. We thought we'd see a pullback, which we have done, and it's triggered us into some add-in positions, which, in fact, I'll just go back to the I'll just go to the Euro chart so you can see. So when I screenshotted this, so this is where we sold at 114.50. Lovely trade, came down, went down way over the 200 pip mark. It's come back into 113.40s. You can see this nice what was resistance here became support here. We broke through. It's now resistance again. So we are looking to see this push through of dollar strength, and it is a little bit frustrating at the minute because the fundamentals in theory are edging for dollar strength. However, for one reason or another, we're sort of not getting that follow through, that commitment we were expecting. After last week's big move, we thought we'd get a nice little steady pullback, and then boom, we'd see the continued dollar strength. Our COT analysis, which we specialize in, would also signal that we're looking at dollar strength as well, and we're looking at weakness across a few other markets. So we'll be looking for potential sell signals in yen, Canadian dollar, Aussie dollar, and Euro and Swissy. So guys, in terms of markets and things to look at, that's exactly where we're at. We're not going crazy at the minute with positions, just because the markets are very, very volatile and we're seeing huge swings. So the kind of sort of analysis you're seeing there from myself, this is what we call the pure analysis breakdown. Clean charts, our levels are derived from price action only. We don't use any indicators. We trade with a fundamental bias. We also use the commitment of traders, which I just told you about very briefly. And on average, our stops will be a 40 pip stop up to a 50 pip stop on cross pairs. If you've got any questions about our videos, about our content, or when we're running our next programs, what I'd suggest is drop us an email at info@phoenixblue.co.uk, or alternatively also give us a call on our office number, which you can see on Facebook or our website, which should be live tomorrow, by the way, guys. So sorry about that delay. And if you are new, we are also on Instagram, and our Instagram name is Phoenix Blue Trading. We're also on Facebook, and that's Phoenix Blue Trading as well. Okay, guys, have a great trading day, and remember, be cautious around the governor's speeches. Take care. Bye-bye. See you tomorrow.